So for the next 30 minutes, we're going to have a fireside chat with one of the experts in this space. His name is Adam Kaufman. He's with ArborCrowd, and he's going to explain to us how commercial real estate institutions seize the benefits of crowdfunding in order to offer individual investors new financial growth opportunities. So it's a whole new way. It's a whole new market. So please welcome Adam Kaufman of ArborCrowd.
Thanks for having me. I'm excited to be here today.
So let's quickly just kind of run down what's happened in crowdfunding as it relates to real estate, because this is a whole new area that started to attract people, and people were saying, wait a minute, can we do this in real estate? Tell me how that evolved.
So real estate in the crowdfunding arena first came to fruition in 2012 when President Obama signed the Jumpstart Our Business Startups Act. What this did was it eliminated the prohibition against general solicitation to the public. So for the first time, people were able to go online and offer real estate investment opportunities to a retail investor class. Before this, you had to either know somebody in the industry, have access to it, or meet the high minimum threshold requirements to invest in alternative real estate vehicles, such as a real estate investment trust or a private equity shop.
So you had to be an accredited investor.
Exactly.
So,
but more than that, an accredited investor, but also have the relationships to know how to get access to that real estate investment.
Within that sphere, yeah.
Exactly.
So then what happened? So he signed that, and then what was the next step? Because you and your company have been in this business a long, long time. Tell me what steps you took to enter that business.
So now, ArborCrowd is an online commercial real estate company, and we're affiliated with the Arbor family of companies. Arbor Realty Trust, our sister company, is a publicly traded real estate investment trust on the New York Stock Exchange. And AMAC, Arbor Management Acquisition Company, is the private equity branch to our family of companies as well. So we founded ArborCrowd a year and a half ago. We launched our first deal a year ago, but we're fairly new, but we're backed by the institution.
So what were the first steps in getting that started, and how did you go out to establish a crowd? You already had an established clientele because you've been doing this for a while. How did you transition into the crowdfunding area?
So we had the idea when the law was first enacted, but we understood that a lot of different types of companies were going to go to market and try different things, and that legislation was going to catch up to them. People were going to learn from their pitfalls. They were going to understand what works and what doesn't work. So in 2012, a lot of companies started to come into fruition, and a lot of them were really just technology companies. For the first time, they could say, hey, we can build you a technology platform that can give access to your real estate. Soon after that, people started to evolve and change because a lot of investors didn't want to invest alongside technology companies. A lot of real estate people didn't want to go to a technology company that would close on a deal and then go back and raise the money online. So things have been changing a lot in the industry, and we watched that change happen, and we picked the model that we felt best suits where we are today.
It's really interesting because you think about the pitfalls of something like this. You're thinking to yourself, I'm a guy who has, let's say, $25,000, and I want to invest in am I investing in an actual physical facility, or am I investing in someone who's going to try to buy a building? How does that work?
So that's a great question. What we offer is the actual ownership in the real estate itself. So you're not coming to us where we're raising a fund of, say, $50 million, like some of the other people out there, where they then go and figure out how to deploy your capital, and you don't access that understanding or transparency where that money's ultimately going to go. What we created is a property model where you actually get to see the property, who you're going into business with, because at the end of the day, it is a partnership, right? And understand what the terms are of the deal, and if that meets what your requirements that you're comfortable with. So people come in, they look at one individual property at a time at arborcrowd.com, and basically make the decision on their own if that's the right investment for them.
So, so there is the model of investing in a group that says we want to buy an apartment building, help us buy an apartment building. and you're putting in your money and hoping that these guys know what they're doing when they buy this apartment building, if they get enough money to buy the apartment building. You're saying in your model, you've already purchased the property, you have history managing that kind of operation, and there's a little bit of, there's less risk, a little more security, and do you guarantee a return?
So let's talk about risk and security for a second, because I think that's a great concept. The way we look at it is we not only acquire the interest in the property, but we make sure that the sponsor, the person running the property, and the management entity running the property have their own interest or money in the investment as well, so that everybody's interests are aligned. Because if you're going to go and buy an entire property on crowdfunded money, you're ultimately going to rely on the manager or the sponsor themselves to make the decisions for you, but if something goes south, they can just walk away and they have nothing to lose. So our model is a partnership. You're partnering with the sponsor and his or her own equity or equity group to ultimately go through and make that investment into the actual real estate itself.
So since this is so new, there's got to be a lot of things that would be like red flags. For those of us who are looking to invest in real estate, because it's something really we all know. We all buy houses or condos or whatever. We understand how to buy real estate. But when you go to talk about investing in something a little bit more, let's say, exotic, like something like a REIT or something in that regard, I want to make sure that I'm doing the right thing, but I want to make sure that it's secure, and I'm still not comfortable with what we're doing here. So explain to me what kinds of questions I need to ask before I jump into something.
First and foremost, you need to ask, who are you going into business with? What's their expertise? So with us, we're backed by an institution that's been around for 30 years. We've survived multiple market cycles, and we really have the breadth and relationships with the sponsor to access the deals. So you need to look at the experience of that sponsor. What have they done? Secondly, you need to look at the transparency involved. What are they presenting to you for you to make that investment decision? So what we do is we put together an intensive offering overview on the property itself, and we lay out all of the information that we are looking at so that you can look at that and make that investment decision of your own with the same information. Plus, we're always there to answer all of the questions that people may have. And thirdly, like I said before, it's really important to make sure everybody's interests are aligned.
Yeah. So here we are now in this new era, this new magical, we can put $1 and be part of something bigger than ourselves. When you looked at this from a big picture standpoint, were you going to say now, as a company, as ArborCrowd, we can go around the country and buy, do you buy distressed properties? Do you buy properties that are high performance? I see this Alamo Heights thing that we're going to talk about in a minute, but how do you identify properties, and what do you sell to the people, the crowd that's out there looking to invest?
So the process in which we identify properties is very unique. Because of our 30 years of experience and the relationships that we have, I have the opportunity to sit down with hundreds of sponsors over the course of the years and say which deal is the best deal for us to present on our platform. We're in no rush. We're not VC backed. We don't need to show just upward trajectories of growth. So what we do is we wait for the right property at the right time based on our relationships, and then we launch that on the platform. Our focus is our bread and butter, which is our expertise, is multifamily asset classes, specifically workforce housing. Okay, so I'm going to ask for questions at any point here. Right there, the young man in the hat. Go ahead.
As easy as it is to get into it, how hard is it to get out of it if you're trying to sell liquidity?
So that's a great question. Once it's typical in real estate, what we do is we project a hold period on the onset of the deal. So for our current deal that we're actually launching today, to all of you, to give you guys the opportunity to participate, because typically our deals sell out pretty quickly, we're advertising a 2 to 4 year hold period. So your money is tied up for that 2 to 4 year hold period, projected hold period, and you cannot liquidate, as in many real estate investments, because if you were to pull your money out, how could that money then go towards capital improvements on the property, right? It wouldn't be possible in a model.
Awesome, thank you.
Any other questions? Yes, right here.
Why not just utilize
people ask me that all the time. They say, you guys already have a private equity shop. You guys are already in real estate. You have a publicly traded real estate investment trust. Why go into crowdfunding? Why go towards the retail investor? And it's a simple answer. When the Jobs Act was signed, what happened was a whole new class of investors suddenly entered the market. And we understood that the future was going towards opening up to this retail investor class. And we're a constantly growing company that offers a lot of services, and this is one of the services that we thought would be best.
So this is so new, how it's not time tested. So tell me about your success in this area and what your current investors are experiencing.
So we've launched 4 deals to date since our first deal last year. We have an enormous amount of repeat investors. People come back because we thrive on relationships. So we build a relationship with investors. We offer them the materials that they need to make their investment decisions, and a lot of people come back. We're launching our 5th deal to you guys exclusively here today, but we'll be launching it to the public in about a week.
Okay, so we're gonna hear a little bit about that coming up in just a minute about how that process works. So we talked in the previous panel. They talked about building a crowd and having a direct relationship with that crowd. I would think that real estate is one of those things where it's not only emotional, but it's also a business transaction. How do you relate to your crowd, and what do you do on a routine basis to connect with them?
I mean, we regularly answer questions that people ask. We have happy hour events, we host dinners, we do a lot of in-person stuff, as well as online marketing. But it's really just, when people first come in, we first reach them online. Maybe they hear about us from a friend or family, wherever. Maybe some of you sitting here today. We reach out to you, we talk with you over the phone, we invite you to events, we cultivate a relationship, but ultimately, it really comes down to the transaction, right? What are we offering? Do you like that offering? Because the only reason we'd be speaking is if you did. And if you're going to invest with us, you like the model. Are you already seeing returns on some of your initial investments to date with us? And do you want to come back?
It's interesting, isn't it, that we talk about all these companies and great creative ideas and all the things that happen in the world, and your opportunity to invest in something kind of exotic or unique, like what we're seeing in the other room, and yet real estate is something we all know and live and we understand very well. So I think this is really interesting that now we're using new technology, a crowdfunding process to get into a business that we know, but as an investor who would perhaps not be accredited, be able to get in with a minimum amount of money. Again, I'm asking for questions. Yes, sir, right here.
How long is the Jobs Act in effect for, and is it vulnerable to, an executive order by the president or legislation by Congress?
So the Jobs Act has been in effect since 2012. And all of the hearings in Congress to date have actually only been to open up the Jobs Act even more and make it less restricted. That's the area that everybody's going. Now, if you look at some of the crowdfunding spaces, crowdfunding companies in the space right now, a lot of them actually have close ties to the family of the president.
I think Trump's bullish on this, to answer your question. Yes, sir.
So there are a lot of companies out there, and there are some companies operating under Reg CF. But more recently, about a year and a half ago, Reg A Plus came to the market, and a lot of companies shifted that way, where they basically look to raise $20 or $50 million funds from non-accredited investors. They have different minimum requirements, but they're non-accredited investors. They're true retail investors. However, the way they operate is that you actually have to go give your money to this fund, right, where they then go and figure out how to deploy the capital, and you don't really get the right insight or transparency into how they're doing that. So it really depends on the preference and the type of investor, but there are a lot of people are operating in a lot of different ways.
Yes, right here.
What metro areas are you most interested in?
So, we look everywhere all the time. A lot of our borrowers that come to us in the Arbor Realty Trust side, they're all over the country. And what we do is we say, okay, where is the right workforce housing, multifamily asset that's going to yield the right returns that we look for on the crowd level. And we go from there. There's not really a particular metro area that we have focused on. We've done deals in New York City. We've done a deal in Brooklyn, Miami, and more recently San Antonio. And then we've also done a deal in Mississippi.
What kind of metrics do you use to identify a project?
You know, obviously, a lot of our metrics are proprietary, but the way we look at it is what are the returns that are going to be yielded to the crowd, right? Is the crowd going to achieve 12 to 15% return in a primary market such as New York City, or are they going to get a bit of a higher return, you know, in a secondary or tertiary market such as Mississippi or Alabama? And it really depends on the type of investor. Everybody has different investor preferences. We understand different people's investor preferences based on our time and experience in the industry, and we make those opportunities available and target different types of investor profiles.
Okay, questions right there, sir.
I think that's a bit of a tricky industry. I think you're asking people to buy into a concept where they not only have to believe in the execution of the developer, but they're tying up their money for this development to take place. They better make sure that the budget and the construction costs are going to be nailed down accurately to achieve the small margins of return, and they have to sit on it. In terms of the debt side of it, you know, we have a breadth of experience on the debt side, obviously, with Arbor Realty Trust. And when we look at debt crowdfunding, we think of it as a really, really hard concept to sell to a retail investor because debt is naturally one step removed from the property, right? It's a legal instrument. And debt requires a lot of nuance and understanding. And to convey that to a retail investor to buy into, I think is very hard, and then they have to go back and trust that person presenting it to them that they know what they're doing. I don't think it's impossible, but I do think it's difficult.
All right, right here, gentleman standing up.
In the crowd model that you built, how does ArborCrowd, not the parent company, but ArborCrowd make money?
We're a fee-based business, so we charge traditional real estate fees. An acquisition fee, a refinance fee, a disposition fee, and an asset under management fee, and that's fully disclosed in our offering overview. There's no sliding scales of fees. You don't have to read the fine lines to figure out what fees kick in when. It's all illustrated in the offering overview.
Yes, right here, ma'am.
How do you evaluate returns for the crowd versus an institutional investor?
Sure.
So we look at the deal as a whole. And we say, you know, basically it's going to be net of fees for the crowd. And for institutional investor, they're going to, you know, based on their equity size, they're going to be achieving a certain return. But it depends on the deal.
So as you go through this process, you can see that they've been able to marry this institutional, very traditional real estate business into this new sector. And I find it really interesting that I'm sure you had a conversation in the executive suites of your company, and you sat down and somebody said, "There's this new thing we got to get into." How did that conversation go? And because some folks here may have smaller real estate companies or large real estate companies, it doesn't really matter. That's always a difficult conversation to have when you're pushing a corporate or a company into an area that they've never, ever gone into. Talk to me about that, how that conversation went and what was discussed.
So we're part of a family of companies. We're a sister company, so we're not we don't operate under the publicly traded REIT. We share the same leadership and the same half of our name. So I didn't have to go ahead and say, this is where the company is expanding. It really was, this is the idea that we think could bring tremendous growth to the brand as a whole. And a lot of people in the real estate industry are very conservative and very old school. So describing to them the retail investor class, what that can bring, and particularly on the Arbor Realty Trust side, what that could bring to our borrowers, right? All of a sudden, they have a new source of equity that they can come to all in a one-stop shop. They could look at us as a menu of items and see all of the things that they need. And everybody was very excited about
So
that.
surprisingly, they were open to the just the notion of just the way you laid out the numbers, and it just worked for them.
It did, yeah.
Amazing. It sure doesn't work that way in a lot of industries. A lot of sectors, you find a lot of resistance, especially in my sector, in media. We've been trying to change the world there for years, and they're resistant to change, believe it or not, which is what's given birth to things like Netflix and Hulu and others.
Yeah, I think there are a lot of companies that are resistant to change, and a lot of institutions in particular. But that's why we understood, as an entrepreneurial company that's growing, that has many facets to it, we understood this is where the market and the industry is heading. You have a lot of new investors who really are excited about the opportunity to come in and participate in real estate. Everybody's really used to, gambling on the stock market, having their money sit in the bank, earning 3%, investing in bonds. Now they actually get to invest and see returns in real estate and own something at the end of the day.
All right, a couple more questions before we get into this last section. Yes, sir.
So it's not all that different. We basically have a JV agreement that brings in the crowd entity, and each crowd investor rolls up into a whole into the crowd entity that forms into the JV agreement.
And sir, you were standing back. Yeah, go ahead.
There are legal costs, just like anything else, but other than that, we don't bear that much because the relationships are already there in the door on the debt side, right? So we're basically just putting a new agreement.
Are those costs built into the unit as the investor comes in?
No.
Okay. All right, so we have an announcement that we'd like to make. ArborCrowd is working on a new project, and Adam's going to describe it for us, and we have some slides that we're going to show you here on the big screen. Go ahead, Adam.
So yeah, we're really excited to announce our new project. If we could go back one slide, there we go. We are launching a new project exclusively to everybody here today to make an offering in San Antonio. Our deals in the past have funded quickly. We've raised $2 million for a deal in just 3 days. More recently, we raised $4 million in 6 weeks. So we're opening up the opportunity to you guys exclusively here to come in and invest in this multifamily project in San Antonio. It was an off-market transaction that we bought at a really good cost basis. The property was under management with a different company, under a TIC structure, actually a different owner, sorry. And it was really underperforming, and they would have to put in significant equity to really get the property at the right level. So we came in, we acquired the property already, which means we closed on it, the transaction's occurring. We then go and open it up to the crowd. And we're projecting a 16 to 19% IRR with an equity multiple of 1.5 to 1.8 and a targeted hold period of 2 to 4 years.
All right, so it's called Quarry Station.
Yes.
Tell me a little bit about what attracted you to this site and this location and what the potential is for this.
So, like I said, it was an off-market transaction, and it was severely mismanaged before that. If we had access to deals like this more often, we'd do them every single day. These are really hard deals to come by. Because of our network of sponsors that we have, we were able to get access to this, but I can promise you there are a lot of other companies who would not be able to see these transactions. So we jumped on it quickly. We closed on it quickly. It's already been achieving, since we acquired it and instituted the new management company, the property has already started to perform better. We're receiving about 13 cents per square foot improvements in each unit, and we're really excited to bring it to market.
All right, so if you're interested, there you go, arborcrowd.com/CIS17. And of course, we appreciate very much you being here with us today. We're going to continue this real estate crowdfunding for investors discussion here, but that ends our official fireside chat. Big round of applause to our guest here.
Thank you, everybody.
Adam Kaufman. Adam, thanks.